Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today we have an action-packed economic calendar with several events that traders should be keeping an eye on. First up, the European Zone inflation report will be released at 11 o'clock South African Standard Time, which could have an impact on the markets. Additionally, traders should also watch out for the factory orders and jobs job openings data, which could provide additional cues on the path of the monetary policy for the USA. On the earnings calendar, we have several big-name companies including Pfizer, Advanced Micro Devices, Starbucks, Uber Technologies, and Ford Motor Company set to report quarterly results today. But wait, there's more. Don't miss your chance to win a limited edition branded mug by simply liking this video and commenting the answer to the following question. The real estate prices are rising, and banks are giving loans left and right to people who might have problems repaying them. What would a central bank do with the interest rate in order to normalize the situation? Is it A, decrease it, B, increase it, or C, leave it alone? Make sure you are subscribed to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. Terms and conditions apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar has risen to an almost 2-week high against a basket of currencies, ahead of the Federal Reserve's expected 25 basis point interest rate hike. This follows data showing that the US manufacturing hit a 3-year low in April. Traders will be closely watching whether the US Central Bank signals that it expects to pause rate increases after May, or if it keeps alive the possibility of additional hike in June or later. Now let's move on to the analysis for Euro USD. The fiber is currently trading just above that support level, and if we get a close around the 1.0995 level, we could potentially see a rally all the way back up to that previous resistance. Shifting our focus to Wall Street, US stock futures experienced a negative session amongst benchmark averages, with the Dow Jones Industrial Average falling 0.1%. The S&P 500 finished flat, and the Nasdaq was down 0.1%. This comes as market participants reacted to the JP Morgan Chase takeover of the troubled First Republic Bank, ahead of this week's Federal Reserve interest rate decision and continually quarterly earnings results. The overnight sale of First Republic Bank's assets to JP Morgan Chase resolved the third US bank failure in 2 months, causing treasury yields to rise and expectations to firm up for one final US rate hike this week. JP Morgan shares rose 2.1%. Now let's take a look at the analysis for the Nasdaq 100. US tech is currently hovering just below that resistance zone, and a close below 13,200 could trigger a decline back down to the previous support. Alternatively, a close above the resistance could see this rally extend to the next high point. Moving on to commodities. Oil prices dropped by $1 a barrel after weak economic data from China and expectations of another US interest rate hike outweighed support from OPEC Plus supply cuts that take effect this month. China's manufacturing activity unexpectedly fell in April, the first contraction since December in the Manufacturing Purchasing Managers Index. Brent crude fell $1.02 to settle at $78.45 a barrel, while WTI crude slid $1.12 to settle at $75.66 a barrel. Now let's take a look at the analysis on crude oil for today. This commodity is currently hovering in between those two zones. Should we get a close above $76 a barrel, we could see a rally all the way back up to that next resistance. However, should we close below $75.10 a barrel, we could see a decline back down to the previous support. Finally, let's finish things off with gold. The yellow metal experienced a seesaw session, first rallying more than $30 an ounce, just to drop back down, now hovering well below key levels as anticipation of a likely interest rate hike by the Federal Reserve supported the dollar and dented the demand for the yellow metal. Looking at the analysis for gold today, the yellow metal is currently trading within a relatively tight range. A break and a close below 1,980 could trigger a further decline. However, should we get a close above 1,984.5, this could potentially cause a rally back up to that previous resistance.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.